Okay, so I'm doing this video on Saturday, so obviously I'm covering the close of Friday, which was a very interesting day and very significant for not just the markets, but the dollar interest rates. I think we know what to watch next week. So let's look at the markets straight away. The markets were kind of flat. You had the S&P and the Nasdaq down. I mean, the S&P basically was unchanged, but the Nasdaq was down. And NVIDIA is a particular stock that I am short still. I started to cover for the first time that stock, but I think it can go much lower. And I just feel like the Nasdaq, when I was watching NVIDIA, it was like the NVIDIA was dragging the Nasdaq lower. I don't know if any other stocks were doing it, but it just feels like the Nasdaq's very heavy. Yeah, that comes into what I want to talk about here because I think the markets need to come lower. I think they want to come lower. The S&P, yeah, it's unchanged. You can see it's still holding this horizontal. And also I said this ascending would come into play if it did start to lose the horizontal. And to be honest, I don't know if it did really, but I just feel like this entire area has a decent amount of support. But if we were to lose it, like the Nasdaq already has, then we should come all the way back down. I've said that already the last couple of times, and I say it again. I think we're going to come back down to 430 on the S&P. That's a pretty decent move down, and that would suggest the top is in. Think about what the chart will look like. It would be a head and shoulders because obviously you would bounce from there. I just don't know how much we're going to bounce from where we are now. I think the dollar and yields are going to keep going higher, especially yields actually, and that should just burst this massive rally. People thinking we're back to normal. It's that famous chart where you're in a bear market and you have a very strong rally. It's true this rally has been stronger than all the others, but then again, this entire bull market the last 2 decades has been totally unprecedented. So you'd expect the bear market rally to be pretty insane too. So yeah, I think we're just going to go a bit sideways, maybe small bounce, but down we go. Form this right shoulder. Obviously, we bounce from here and then I think we go lower, and then we'll see, we'll sort of go sideways, up, down, whatever. But I think the top is in. I've said that before, but really now it's starting to look more obvious. So anyway, otherwise the S&P was basically unchanged, holding this horizontal here. But let's look for a breach, a close below this ascending next week, and then a move down to make that right shoulder, which I think the Nasdaq is doing. The Nasdaq is forming its, well, not yet. It needs to come back down to pretty much 359. But I think we're going to do it. I was watching the Nasdaq. Usually I watch the S&P when I've got my chart for the markets up. But yesterday I really had the Nasdaq up just for my NVIDIA short, which is finally in the money. I was, underwater on that position for a while. It's just one position. It's not too crazy, but around four, what's the number? Like 409 or something I covered, and my average was 410. So I was underwater for a while, it was at 470 or something. So actually, let me look at that real quickly. Yeah. Yeah, you see here, for example, I started to buy back just on this ascending here because I thought, okay, that'll be support. But I think NVIDIA is going to go all the way back down to 380, maybe a stop off at 400. Anyway, sorry about that. But it is important for the Nasdaq. But I do think the Nasdaq is going to come back down to this horizontal, make a little shoulder, and then let's see, does it bounce from there? It rarely does. Usually head and shoulder finishes with a neckline close, break, and down we go. And then to be honest, we never really tested this, did we? This 337 sort of breakout. Even that would still be technically bullish, even though for me it would be, the bear market's back on. So for me, the Nasdaq goes lower. I'm not going to cover resistance on the way up because I'd have to create this descending line, and I'm not in the mood because I don't even want to consider that. I don't think it's going to happen next week. And if it does start to reverse strong, then next week, Monday, I can do that. But for now, I'm just going to cover support. And yeah, 358, 359 for the Nasdaq. Dow Jones, though, look at this, still resilient. Green Day, the markets weren't catastrophic, right? Look, it's basically you do an average, it's unchanged, it's sideways, but with a little bearish connotation to it. The Dow Jones, though, look at that, still resilient, even after this pretty ugly candle. But then again, it didn't close as ugly as the other ones. I added this little line here because you can tell this seems to be support. We need to just have a little close below 35,000. We need to close below 35,000 and then we can go all the way back down to this horizontal 34,600 or ish, whatever. Maybe it overshoots and does 34,400. But the Dow Jones definitely stronger, but it had a late rally. It hasn't rallied as much. But I think if the S&P and the Nasdaq go lower, and they didn't really, I'm talking about a 1% drop in both of them at least, then you can expect all the markets to be red. But Dow Jones outperforming on the way down. The Russell, yeah, it bounced on its horizontal. It wasn't too crazy a day for it to warrant further downside. But again, I think the Nasdaq and then the S&P will go lower, and then the Russell will find itself here around 184 or something. Consider it takes 3, 4, 5 days to get there. It'll probably be around here. I think the ascending will come into play. Otherwise, maybe the ascending is irrelevant, and if it is, then we come back down to this horizontal. You can see. Let me just delete it so it becomes more obvious. You can see why this area here would be obvious support. So on a big move down in the markets, definitely the Russell will come back down. Yeah, the banks would also come down because that basically follows the Russell or leads the Russell in many cases. But the banks were not red today, just like the Russell, had a sideways day. You can see the XLF just back into this ascending support given the close. It's just holding this little range, waiting for a bigger direction in the general markets. And I think that direction will be down. And if it is, then down we go to be honest, it's hard to tell really where we'll find support. For me, it's between 33.50 and 34. But let's at least get to 34 first, and then we'll see. Otherwise, yeah, this range here, I don't draw a trend line because it's not very, very clear, and it will ruin the chart a bit, but I can tell, at least I think I can tell, that it'll be around here. The KBE, the more regional stocks here, there's the only ascending I've got down here. I think if we do have a general move lower, we're not just going to go here and bounce. It's too small a move. I think we're going to go all the way back down to 38. So a big move low in the Russell towards this area here, 183. Actually, I'll put back my ascending because I think it will actually come into play. I think the KBE will be around here, 38 point something, that horizontal. So that's what I'm looking for on a move down. KRE, same sort of thing, maybe even overshooting and going back to this ascending. So I'm looking for a move low in both the banking ETFs, the small and regional banking ETFs, if the Russell moves lower, which depends on basically the Nasdaq, I would have to say. So I want the Nasdaq to go lower. I want NVIDIA to go lower, as well as many other tech stocks that have really rallied too much, setting the Nasdaq lower, which will push the S&P lower, which should eventually push the more resilient Dow and Russell lower. And who knows, maybe the banking stocks start to compete with some of these tech stocks going down, because I think interest rates are going to start rising even more, which is a good segue here. 1 year, it's a bit special. It's always sideways, sort of up. To be honest, it hasn't moved up too much recently, but doesn't matter. It's another sideways day. I don't really follow the 1 year too much day to day, because only if it makes new highs, or obviously if it closes below this 5.27, then that would be worth noting. But otherwise, any other movement around this area, this range, is kind of irrelevant. Even I would say this range, not really worth paying attention to. It's just the 1 year. The 2 year starts to become noteworthy. The 2 year, which is the rate the Fed usually follows, actually the Fed funds rate. So, now it's more obvious. We had this big move up, comes back down, retracement, bounces, gets stuck in the channel, and we had this little drop, and I thought, oh, it's going to be between this line and this line now, and obviously this is the high, and now we know what to watch next week. Maybe even Monday, let's look for a close above 4.95. That'll be huge. That'll guarantee pretty much a run to here, which will guarantee a breakout. A close above 4.9. Even now, I'm almost sure it's going to happen, but a close above 4.95 means interest rates keep going up. And this is the rate that the Fed needs to follow, which means the Fed is unable. I mean, where's the Fed right now? Like 5.25? That means the Fed is not allowed to cut rates soon, because the Fed has to make sure that it is pinned to what the 2 year is. So if we start to make new highs and go up, the Fed's going to have to keep raising rates. To be honest, I think the market is now more inclined to believe that that's possible, that the Fed will keep raising rates. I've thought that for a long time now, that the Fed will keep raising rates, probably to 6% or 6.25. But I think if we break out here, then it's more guaranteed that it will happen. The 5-year, it's the same stuff. Look, we're all looking for I'm looking for next week a close above the last high, in this case 4.4, which, I mean, it only touched it. It didn't, a close above 4.44 will be a lot more meaningful than just visiting it and then closing down here. So for me, the 5-year, if it closes above 4.4, or even if the 2-year does its thing, we're going to new highs. In the 5-year, the 10-year, look at that. That's probably the most important one. Again, it's the 2 and the 10 that's the most important. Recently we've had the 30-year that's more important. The 5-year has been moving more importantly. It's back to normal 2 and 10. And look at the 10-year. A close above 4.2. Bam. We go to new highs. Interest rates are going to new highs of the bear market. And last time we were at highs, the market crashed. Right now, the market's rolling over. So I think we're going to have interest rates going up, markets going down. And I still don't see stocks moving too crazy to reflect that. 30-year, same thing. Here, let's look at some of the European firms. Look at this Italian. Not all the way near new highs, but look at this breakout coming. When the European yields just have 1 or 2 more days up, bam, we close above here. Up we go to the record high, near 5%. That'll be huge. Italy has big problems. Look at the French. That is just guaranteed to break out. That's a beautiful chart, to be honest. A lot of them are just following the same trajectory. The German, same as the French. The EU 10-year is an average of all of them, so they really look the same. Look at that. Look at that close. It's just looking for 1 or 2 more days, close about 2.8. Bam. Europe, see you later. Interest rates going up. How's your housing market? What about all that debt? The car market, housing market, car market, student loan market, just corporate debt, government debt. It's toast. How can you keep markets all the way up where they are when this is happening? I was going to look at the Japanese, but that's just a bit special. But they're screwed more than anyone. The British, look at that. Sunak comes in. Oh, I'm fiscally conservative. I have all this experience. Absolute trash. Back up we go. That's the 10-year. Look at the 30-year. Same thing. Look at that close. That's the best close so far. A move higher. Bam. We're here in 1 or 2 weeks. Interest rates are going up. This is not irrelevant. This is the most important thing out there. Okay, let's look at the dollar, the DXY. Zoom in. This is what I said. Look at this close above the descending. I don't know how many people have these trend lines, really. Look at the close above this descending. Next most important level, and I really zoom in and get tactical about this, was this little high over here, 102.84, whatever it is. You can see we popped our head above that, and then we closed at that level. To me, that's good enough to suggest we go higher. And to be honest, interest rates are going up too. Well, the two coincide perfectly. So next week, I expect the DXY to go up here, 103.5, which is where decent resistance should be, an extremely important resistance, because if it starts to close, and okay, I don't know how unbelievably accurate these lines are. They're pretty accurate to me, but I could be off by a couple of millimeters. And sometimes that's important, but generally it shouldn't matter, because the point is, if we're able to close, well above, and we're several days away, I reckon, but if you're closing at 104, let's see, that's probably the number you want, 104 up here, in case I'm off by a few millimeters. But it's a psychological number, and definitely by then you've accounted for any error here. Then you're saying, okay, maybe there's a squeeze coming. Maybe we're going to move all the way up to 105.5. And then what does the chart look like? The chart looks like we put a massive bottom in, so any move down is going to get bought. The DXY for me had a very bullish close, and we move up to 103.5 next week, early next week probably. Anything can happen, blah, blah, blah. Obviously, there can be some news event, or maybe I'm wrong, but for me, the chances of it happening have massively increased, and yields look very, very bullish too, and the two usually are holding hands together as they rise and fall. So I think yields and dollar up. I won't even look at currencies, because this is just a reflection. Actually, I will, because it's a long video. Yeah, look, close at low. Maybe we go back down here. Maybe that's what it takes for the DXY to move up to 103.5. The euro all the way down to here. To be honest, it hasn't really rallied up here. This ascending is now irrelevant. It's touched it many times. So yeah, this kind of area here for the euro dollar, Japanese yen, look at that. I knew this strong bounce here on this day, 28th, was too strong. We tagged here, we went all the way up here, closed. Next day, we're above this already in 2 days. It says we want to go here. We did. Look at this retracement right back down to this latest high. Staircase up, bullish staircase. We're going to go up. Where do we go next? All the way up here. You know, probably maybe here, stop off first. This is the more important zone and the absolute high. There are 3 levels to watch. Basically 150, isn't it? We're going to go to 150 on US dollar, Japanese yen. And the GBP bouncing, yeah, a bit like the euro. I think we're going to close below 125 and start to move lower. Then the top is in there. Look at the big move we've done there. Makes sense that we failed over here. Very steep ascending that's just been lost. Canadian dollar doesn't make up too much. That should be around support. I don't know, but maybe that goes back down to here. Yeah, this is going to be a long video, but it's worth it. And it's the weekend. You have time to watch it. So for me, dollar is justified to go higher. The currency markets, the currency charts also reflect that. Okay, let's look at commodities. Copper, always sensitive to the dollar. Down we went. Look at that. We tagged the horizontal. Perfect. What happens next week? Well, if the dollar goes up, and I'll get to the gold and silver that have been relatively strong, but still in the face of dollar and yields going up, can't really have big green days. I think copper has to come back down here. We'll bounce maybe if there's no huge surge in yields or dollar, we might have a little bounce back into the ascending, but really I expect it to come back down if the dollar does what I think it might do, 3.5. And that's not the worst thing. We're just basically, it's a slow market, copper, you know, zoom out. What are we doing? You know, just hanging around here between 3.5 and 4, just as the dollar does a crazy move, it can do that. You know, and then eventually it'll resume this huge type of move. Look at this COVID move it's done. It can do one of those later. It's just the settings are not there yet for it. Natural gas. Yeah, you can see the bounces in now. Look at that. Perfect. It tagged this horizontal perfectly. And now we're just going, to be honest, I can actually eliminate this very, very important long-term. I'll leave it just for a couple more days, but just to remind me what we're dealing with. But I think we're going to go, yeah, like I said, back up. Let me delete this, but that's what I think is going to happen. We're going to go back up. The descending is not too important anymore because we've already breached it. But yeah, test 3 again. I think we need to start looking to close above 3, even though we did it there. And well, actually, no, we need to close above 305, 306, just to be sure. And just say, okay, we're done with this period now. Now we're looking for the mid threes, the 4s, the 4.5, the gap, all that stuff. So let's look for a move back up. Hopefully, it's not a massive retracement like this time, and it, so far it looks different. So let's see if we can do that. Let's look at oil. Still holding this long ascending move it's done. I think we're going to close below the ascending because it's too long a move, too steep a curve. And I think we just need to have a healthy retracement before bouncing back up and maybe then going to the 90s. But so far it's holding. So the technical bullish pattern is not broken yet. And to be honest, if we can start closing above 84, it'll start looking even more bullish. But that's so far a pretty aggressive move, very impressive. But the bullish pattern is not broken. Uranium, said it looks very, very strong in the face of what's happening. It wants to go all the way up here. And Friday was another example of that. Look at that close. Best close so far in weeks, in months. So next week, nothing stopping it from going up unless there's a massive market crash. So uranium looks great. Hold on to your uranium stocks and add on drops. Let's look at gold and silver. It's still not allowed to break out. Gold was unchanged, both of them unchanged. I think they want to go up. They want to go up. The miners want to go up. They did go up. It's just that with the dollar and yields going up, you're not really allowed to see gold go up. It's got some strong resistance just from the other influences, but you know, you can see it wants to do it. So I say also buy the drops now. This is definitely a buy the dip moment, but how much will it dip if the dollar starts to rip and yields make new highs? So it's strong, it wants to go up, but you can get it lower. It's just how low will it go? So buy in levels, buy safely, buy 5% a day, whatever it is, time it on the levels. But I did no buying yesterday of gold and silver. I'm still watching the dollar and yields, and I'm happy with my positions. But on the way up, I'm not covering resistance because it's not unbelievably obvious, and I think it just depends too much on the dollar and yields. So, but just holding unchanged. You can wait another day. Look at silver holding. It's got this new little 22.6 sort of support, but that's not really strong support. Any day it can just go lower, but I see a lot of support. And the longer it takes, the more we start to coincide with this ascending coming into play, which means if we do visit down here, it's going to be it should be very strong support. So I may just start making this bigger, delete this, because the two will coincide now. So I'm going to leave it like this. So for me, $22 should be very strong. And gold, of course, can go a bit down, a bit lower, back to 1900, and it can even dip below. But again, I think if it does dip below, we're having a lot of buy the dip mentality. So I think you can get 1895, flush the 1900 sellers, and then close above 1900. I can see that happening, and that would be very, very bullish and refreshing. The miners, though, they're not even waiting. Look at this. This is strong action. This is reversal action. And to be honest, you have the miners leading the metals. I can see that happening. And actually, yeah, the miners are starting to get bought. 1% is significant, 1.5%, 1.25. Normally you'd expect it to be flat, maybe even negative, or maybe up 0.25% with gold and silver doing what they're doing, but up 1% and more than 1% already suggests something. And look at these candles, and it's almost 6 trading days. That's over a week of just saying, no, we're not going lower. Or if we go lower, we're being bought up. And this candle is pretty much an engulfing reversal candle. So you can probably expect next week. But again, the dollar and yields also close very bullish. So I don't know how much of a move it can go up. It's ready to go up. It's just not all of the surroundings are encouraging it. So, but the close is good. So the miners are being bought and the levels remain correct that I have here, the way I see it. The horizontal support definitely held for a while. So yeah, maybe I should consider buying more down here. It's just I'm a little hesitant with the dollar and yields. So, but I'm happy with my positions, and if we rally, I've got enough in it. So would I maybe sell the moves up because they could be short-lived because the yields in dollar? That's something I got to consider more over the weekend. But that's the GDX GDXJ, exactly the same thing. Great candle, move back up. This is my first resistance, but I don't think I'd sell that. I think if it went a bit higher than that, maybe I'd start trimming a little bit. But again, it depends on the dollar and yields, because what if I'm wrong? What if the dollar and yields start to reverse for whatever reason? Maybe the market rolls over and then people buy bonds out of fear and yields go lower because of that. And maybe the dollar isn't a safe haven. It hasn't been a safe haven during the last crash from the banks. So you could have a scenario where the dollar and yields go lower or stop going up and the market crashes and gold and silver go up, and this is the bottom. So got to always consider that you're wrong. Okay, finally, Bitcoin, very, very quickly. Nothing to talk of, just sideways action, just retracing this big pop. Maybe it's just waiting for more banking crisis before it goes higher. But I'm not sure if it's really following the markets, because it moved up when the market moved down, but then it's moving down with the market moving down. I think it's just retracing a pop, nothing really crazy, just from the bounce at 28,500. Maybe it just needs a banking crisis to go up. And if that banking crisis does not unfold and the markets just go lower based on other events, then maybe the Bitcoin just moves with the markets in that way. So something to consider. All right, that'll do. I'll make another video on my portfolio today or tomorrow, but during the weekend. So otherwise, have a good weekend.